Markets and polls have missed things in the last year, and therefore you could get a surprise in France. However, a 20 percentage point lead is a pretty big lead. Bryson, Wells Fargo Securities. US non-farm payrolls increased by 211,000 in April this year. Jay, what do you make of these figures?
Well, so in general, I would say this is a pretty good employment report. I mean, as you mentioned, payrolls increased by 211,000 in April. I mean, I think the way to look at it is, these numbers can jump around on a month-by-month basis. So over the last 3 months, the economy has created, on average, about 175,000 jobs per month, and that's certainly strong enough to keep the unemployment rate coming down. And we saw that the unemployment rate fell to 4.4% in April. That's about the lowest rate it's been in about 10 years or so. And so that's a pretty good number. And also when you look at the wages number here, average hourly earnings were up 0.3% in April. So in general, I would say when you look at the labor market in the United States, it's performing pretty well right now.
And staying with the US, the Federal Reserve on Wednesday chose to keep their rates unchanged. However, following the meeting, bets of a rate hike in June rose to 94%. Do you think we will see a June rate hike, or is the market premature in its expectations?
No, I think that you probably are going to see a June rate hike. I mean, knowing what we know today, and obviously anything can change between now and the next FOMC meeting. But if they were going to hold another meeting, next week, I think it'd be very, very likely that they would be probably raising rates. As I just mentioned, the labor market is performing very, very well. I mean, there's really nothing in here in this labor market report or in the data recently to suggest that the Fed would slow down at this point. They've told us that they're on pace for 2 more rate hikes this year. That doesn't necessarily mean it has to happen in June, but if the market is pricing in almost 100% probability of a rate hike, it seems like the Fed would take that option and hike rates, particularly with the economy, generally performing pretty well.
And looking at France, we have the second round of presidential elections on Sunday. Macron leads by 22 percentage points as the campaign ends. Do you expect this election to produce the result the markets expect?
I think so. I mean, I think the easy, answer to that would be, well, look, we saw what happened in the Brexit vote. We saw what happened with the Trump presidency here. Markets and polls have missed things in the last year, and therefore, you could get a surprise in France, and you certainly could. However, 20 percentage point lead is a pretty big lead, and maybe it's not that big, but the polls in the first round in France turned out to be pretty accurate for what actually happened there, and so I think you probably are going to see what the polls are reflecting. Now, obviously, if you were to get a big surprise there in the election, that would be a huge surprise to markets. Markets are not priced for that at all. And so if Marine Le Pen does become the next president of France on Sunday, I think you're going to see a pretty violent market reaction to that, because they certainly aren't priced at all, for that outcome.
Thank you for joining us today, Jay, and giving your assessment of the markets. That's all for our weekly wrap-up, but be sure to stay tuned for plenty more financial news.